We are now in aspect 3 of Desjardins' Introduction to Business Ethics, chapter 4, on the topic of toxic and ethical corporate culture. We have discussed what toxic and ethical corporate cultures mean, and now we are going into how they can be established in a firm. It seems that there are 3 key moments to establishing an ethical culture in the firm. 1, leadership. 2, mission statement. 3, feedback channels. So how is ethical corporate culture formed? To a significant extent, it depends on the leadership and the values that leaders both model by their behavior and endorse and condemn in their speech. If a leader acts in conformity with the toxic culture, then that is the kind of behavior and values adopted by everyone else in the company. And the opposite happens if a leader models and endorses the values of the ethical culture. In other words, if the leader is going to manipulate their employees, be dishonest for personal or even the gain of the firm, then that's the kind of behavior that will be modeled for employees. On the other hand, if the leader of the firm is honest and does not manipulate, but rather has discussions with and educates their employees, then that kind of respect for human beings will be modeled for employees to follow in the firm, and the culture will be ethical. An ethical leader that models and endorses the values of an ethical culture does not lie, does not mislead clients or employees in order to maximize profits or otherwise, keeps to the values and principles openly stated in the company's mission statement, empowers employees by cultivating in them the ability to make independent decisions, persuades employees with reason rather than manipulates them with threats or punishments and promises of rewards, and neither sets unethical goals for a company nor pursues them by unethical means. Unethical goals for the company: sales of weapons to terrorists, production and sales of child pornography, and so on. I want to bring your attention to the moment that emphasizes that an ethical leader empowers employees by cultivating in them the ability to make independent decisions. Remember, in an ethical culture, employees act ethically all on their own. That is to say, independently. So a leader in the company can get employees to do what they must by telling them what to do without accepting any kinds of questions or discussions from them, or a leader can get employees to do what they must by letting them make their own decisions, guiding them toward making the right decisions, but nevertheless letting employees make their own decisions, educating them for those decisions, having discussions so that they make the right decisions, but nevertheless, those decisions are made independently. The thought is that such an independently thinking employee is really the ethical employee, rather than the one that simply follows whatever they're told. Obviously, here we are appealing to the Kantian model of ethics, in which a moral action is the one that respects autonomy of each person, one's own as well as that of others. Also, mission statements are deeply important in establishing ethical corporate culture. The point here is simply that a company must make its values, goals, and standards of behavior public. that gives specific guidance to employees and prevents them from adopting a default value of simple maximization of profits by any means, such as we would observe in a toxic culture. The magic of making values public is also in that the company would not publish and expect its employees to live up to those values that do not respect the public or do not increase the well-being of the public. If you make those values public in the mission statement, you're not going to have loyal clients or customers, right? People would just go to other businesses. So there's something magic about making open mission statements in which the company's values are openly stated. Then the company would have to live up to them, as well as it becomes clear to each of the employees what those values are. And those values almost by default have to be ethical, because if they're not, then the public, after seeing those values in the mission statement, would not have anything to do with that firm. On the importance of feedback in establishing ethical corporate culture. A company that aims to establish ethical culture by means of ethical leaders and publicly announced goals and codes of behavior would do well to establish some sort of a channel via which employees who see deviations from the thus chartered in the mission statement course, if they see deviations from that course, they should be able to voice their criticisms. Corruption, intentional or not, is always possible, and it is better if such corruption is brought to the attention of the executives of the company before it becomes widespread. It is preferable for such corruption to be recognized vocally and handled internally, rather than to wait until the company does public harm or to wait until there's a whistleblower who goes public with the grievances because they could not find internal channels in the company that could eradicate and rectify this corruption or address those grievances. Whistleblowing is highly destructive for the companies once it turns public opinion against companies. Really important to have these feedback channels so that employees are able to voice their objections to what they think is problematic and what the company is doing. A lot of harm can be prevented that way before it amplifies in the company. Finally, company must have some sort of auditing by means of which it assesses how efficient it is in living up to its own standards in the mission statements, how good its leadership is. All of that needs to be audited, reviewed, assessed. So just as it would be good to have employees report any possibilities of corruption, it would also be good for the management to perform its own audits by which to assess the effectiveness of ethical culture. There should thus be periodic audits and assessment, and they should be combined with audits from the outside. External auditors may see something that internal auditors on the firm regular payroll may not see, right? So the audits could be internal or external, and it's best to have both.